What is up, guys? Good evening. Good evening. Abdel Kouatmi, got Bridges. What are we talking about this week? What I wanted to kind of dive in this week, on our Wednesday wins is really diving into what we're currently experiencing within the market. Tomorrow is going to be a very big day when we get the employment data report reading. We're going to start seeing potentially some fluctuations in terms of the market with that. We're going to start seeing a little bit of transitions in terms of what exactly is currently happening when it comes to the housing market, when it comes to rates. We have been pretty plateau, kind of bouncing off of the ceiling, more or less, of anywhere from 6.625 to 6.75 has kind of been where I've been seeing. And I'm going to share this with us right now. We're going to look at it. We're going to see if you guys look at where are potential mortgage interest rates right now. If we go here, Mortgage News Daily is probably one of my favorite trusted resources to look at. If we go to specifically Mortgage News Daily, really kind of backtrack 12/1, 12/2, whatever, 12/2, 2023. Now you're going to kind of see we were almost as high as 7%. Then we did a sharp drop. This happened, of course, we know because of the employment data reading that came out around this time with the sharp drop. And then if we kind of see where have we been over the last 2 weeks, we've been pretty much almost the exact same thing for the last month, right? Where we were almost as high as, it's not letting me touch it, but almost as high as you could see 6.8. And that's kind of sort of where we're kind of teetering right now, where you'll see a little bit of a jump, then a little bit of an extra jump, then a drop, then a drop, then a jump, literally basically reviving. And we're kind of catching towards a little bit of the tail end of where we're at. They're slowly a little lower than where they were for the last 4 weeks, but you guys can kind of see, we're basically more or less kind of teetering between that spot of what we want to really look at and take it from there, right? Now, again, I've shared this always with us before. The two most important and crucial things that we want to make sure we stay on top of is going to be inflation and employment, right? Interest rates are going to start to trickle down. We're going to start seeing a lot more inventory, of course, start to come on the market, which is going to create that much more of opportunities for our consumers. But I'll be honest with you, now more than ever, we're starting to see a lot of clients who are simultaneously competing against multiple offers. Previously, final and best wasn't as prevalent as it really is right now, right? It's starting to become very common. It's starting to get out there a lot more. So you really want to kind of stay on top of that stuff and make sure those expectations are being properly set, right? Now, when we talk about this scary word that people usually get, but I really wanted to kind of cover this week is what is a recession and what is essentially the definition of it, right? So again, a recession is essentially, the grammatical dictionary version of it is essentially an inevitable period in the economy. You're always going to go to highs and lows, right? And the recession, when they do end, it can sometimes does damage along the way, does sometimes affect the real estate and the housing market. And that's really what we're going to dive into today, taking a look at some super detailed graphs from our friends at MBS Highway and seeing how that employment market is being impacted, manufacturing market, income, wage growth, and things along that nature are all simultaneously coming together to show those impacts in place, right? Now, again, how often do recessions usually occur? We're going to go over that in a few, but we're usually kind of seeing them, anytime we're seeing very, very high unemployment, which is really what, again, remember, higher unemployment isn't necessarily a bad thing on our end, right? Higher unemployment necessarily shows a little bit of a fluctuation in terms of the market and kind of also shows a little bit of what exactly is happening in terms of employment, wage growth, and things along that nature, and taking it from there. So, how does the housing market react to recessions, right? And that's going to be basically the topic of conversation for today. How does the housing market react to recessions? And we're going to dive into that, right? So if we kind of see the most important thing with mortgages and interest rates, right? Because that is what we're predominantly looking at. And when consumers are obviously spending less, there's of course going to be not that much of a flow of money through the economy. Now, of course, during a recession, it's super, super common for the Federal Reserve to make the adjustments, which we saw, right? They hiked the federal funds rate to the highest it's been in quite some time, which obviously caused a little bit of a fluctuation for borrowing power. Now, what did obviously mortgage lenders were forced to throughout the nation readjust their rates at the same time and make the necessary adjustments in an effort to make sure that we were having the proper coupons, the proper bonds, and so on and so forth, right? Um, Now, what happens to the housing market again during a recessionary period is the crucial part that we want to discuss, right? And you guys can kind of see every single time we've been at this black sort of realm, this is where recessions occur. And we'll see interest rates continuously dropped in almost every single recession, except right over here, the housing bubble that we always refer to, right? So, super crucial when we're taking advantage of that and looking at the opportunities for those clients who are refinancing and the clients who are looking to purchase. As we all know, this is going to be a very heavy refi market this year. Now, again, in real estate, we're also seeing the Case-Shiller Home Price Index. So we're seeing a jump in terms of home values. Case-Shiller came out, I believe it was yesterday or today, also showed another uptick. I believe it was 0.3% with the highest. Wrapping up 2023, we're on pace to seeing a national scale of a 7% appreciation in terms of home values and in terms of where the market is shifting, right? Now, in addition, we talk about appreciation. And again, people are constantly talking about when we go over I'm waiting for a price of a home to drop, or I'm waiting for things along that nature. You're going to be waiting for quite some time, just like all these people waited too, right? And we're going to look at it in detail. In 1943 to 1947, home prices jumped up 118%. So basically, for about 5 years, home prices jumped up 118%. That's crazy. Then they continued to go up again 43 years without one drop. And then from 1974 to 1979, right, that we see, we also simultaneously saw a sharp uptick too. And it continued for 10 years strong, going down only 1% in 1990. Then once again, 14 years. And then, of course, as we know, the housing bubble came about, and simultaneously showed home prices started to reduce with inventories now starting to become a little on the lesser side. Right. So again, my personal thoughts when we talk about the market and the supply and demand, right? Interest rates have basically jumped up almost 2% since 2022, right? We were basically teetering around the beginning of 2022, roughly at around 5.5, 5.75. We're now slightly a little bit higher, right? As I shared with you guys right now at roughly about 6.625 to 6.75. So these rising interest rates are obviously showing the way for a correction, sometimes in property values. Although remember, it comes down to basic economics, supply and demand. The supply for homes is still relatively very low, and that's simultaneously, of course, causing home values at the same time to continue to uptick, right? Now, our mortgages, one thing I want to talk about, I always discuss these various options with our clients when we're looking at it, but an arm mortgage is not always necessarily the best option. Even when we're pricing them with investors, they're not necessarily the best option because truly there's just too many variables in place that are just not going to necessarily allow the opportunity for the files to make sense or for you to pay that much in terms of points to acquire, right? Now, I want to kind of touch base on what happened during the recession. So the recession lasted, we know, from 2007 2009. Obviously, it crushed the housing market, and mainly there was an oversupply of homes. There was a stimulation in terms of foreclosures. Everybody who had a heartbeat was getting a mortgage, right? And so, nowadays it's super, super, super difficult. I mean, I have numerous clients all the time who I would love the ability to help, but you just truly can't because things there or the down payment is simultaneously not sourced and stuff like that, right? So it's not always happens when you're during a recession. Again, most modern recessions we've been seeing home price appreciation stay steady, if not increase. And we're seeing obviously home sales, which we're expecting this year to be a lot higher than it was in 2023, mainly because rates are going to start going down, right? So when we talk about buying during a recession, although it's scary, although sometimes the interest rates might be slightly higher, you're going to simultaneously start seeing those people who bought houses, in my opinion, within the next 3 months are going to look back, and those are going to be the consumers that really took advantage of it before the prices start to turn, right? And there's so much different turbulence and so much different fluctuation that are currently occurring within the market, but I think if you have that steady income and you stay in the home, there's never a right or wrong time to buy. Now, you could, as we always say, right, purchase something with a slightly higher interest rate, but understand that you have the ability to refinance in the near future, right? And that's really the nuts and bolts of what we wanted to cover again. So, kind of giving a little bit back and looking at it, where did home prices, interest rates continuously dropped throughout the recessions, and home prices have been continuously on that uptick, and just like we saw with the Case Shiller index that came out, interest rates simultaneously are slightly kind of battling that ground that we discussed. And then at the same time, we're starting to see that little bit of a fluctuation in terms of home price appreciation, that home values are still consistently going up. Home values have not been shifting, they're continuously going up. And in my opinion, they're going to continue to go up, right? So you want to make sure that when you're going through all this, you have the proper expectations set and you're meeting with the right professionals who are going to set those guidance up for you guys. So that's about it. I appreciate you guys jumping on Wednesday Wins. I will share this on our YouTube channel. Feel free to go back out there, share it with your clients, share it with yourselves. Any questions that you guys have, let me know, and have a great night. Talk to you guys soon.